start with the most negative thing about reverse mortgages, the fact that you could lose your home. When you enter into a reverse mortgage, the mortgage company and the Department of Housing and Urban Development is under contract to not require you to make any interest payments or payoffs as long as you keep your end of the deal. So what's your end of the deal? Number one, you need to live there and let the lender know once a year in writing that you live there. Number two, pay your taxes and insurance and prove it. Number three, maintain the home. And number four, this is the one I promised to tell you in the last video. Be on the loan. This is the issue that's given reverse mortgages some bad press. Little old lady is forced out of her home because of foreclosure on reverse mortgage. This can only happen if the little old lady was not on the loan. I'll explain. If your spouse is not over 62 and therefore cannot be on the loan, or if you remarry after getting the reverse mortgage, your spouse will not have the protections that you do against payment of interest should you die or permanently move out. They'll be forced to repay the loan within 6 months to a year of your death or permanent vacancy of the house. So unless you have a contingency plan, a place for the non-signer to go, or funds to pay off the loan should the signer die or move out, then you should probably avoid doing a reverse mortgage until your spouse turns 62. Additionally, other family members who are living in the home will face the same problem when the borrowers die or move out permanently. So unless your kids or others that live with you can get their own loan to pay off their reverse mortgage, they'll have to sell the house and move out after you're gone. So keep that in mind too. What other horrible things are there about reverse mortgages? How about Medicaid issues? Medicaid is government-sponsored welfare to pay for your nursing home stay if you don't have money to pay for it. You can't have a bank full of money and qualify for Medicaid. And when you make your application, the state can look back 5 years into your financial records to determine if your money has been hidden to make it look like you're broke, so you'll qualify. Large unexplained withdrawals in the last 5 years can disqualify you for Medicaid if they can't be adequately explained. So how can reverse mortgages mess you up for qualifying for Medicaid? Well, if you allow your money to be shuttled into your kids' accounts, or you have large withdrawals that you can't explain, you may be disqualified for Medicaid. This can happen with any funds of yours, not just reverse mortgage proceeds. So make sure that you can account for all of your money if you plan to need Medicaid down the road. This can also be a good reason to say no to your kids if they ask you for some of your money. On the bright side, Social Security and Medicare are not affected in any way. On the other hand, if you don't need the money for yourself and won't be needing Medicaid down the road, how much more satisfying would it be to give your kids part of their inheritance before you pass away? That way you can be there to see them enjoy it. Why are reverse mortgages so expensive? Are lenders just taking advantage of seniors by charging exorbitant fees? The answer is simply no. In fact, lender fees are regulated and have strict caps on what can be charged. All FHA loans contain an upfront mortgage insurance charge that is added to the loan amount. As I explained in an earlier video, if it weren't for FHA insuring lenders against losses, reverse mortgages probably wouldn't exist. FHA has to charge upfront and monthly mortgage insurance in order to pay claims to lenders when they lose money. And the risk for losses are higher on reverse mortgages, so the insurance costs more. There isn't any other way around it. Just to be clear too, these fees can be financed with the loan and do not have to be paid out of pocket, unless of course you don't have enough equity to cover them. What about out-of-pocket costs? Are there any? Most lenders will require you to pay for your appraisal and your FHA counseling up front. Independent counseling is required before you can make formal application for a reverse mortgage. This is the law and it's for your protection. It can be done over the phone or in person and it takes about 45 minutes. It's to ensure that you understand everything and are making the right choice. And I'll provide you with a list of approved counseling companies to choose from. Stand up, take control. You're in charge. Decide right now to stop suffering.
A reverse mortgage from Legend Reverse Mortgage may be the answer to your financial problems. Contact Mark Hammond, the financial planner's choice, today.
I'm not just some person on the phone 5 states away that you'll never meet. I actually live in Utah. I've been in business for 20 years, and I have a good reputation in the community.